Great, thanks, Rennie. So we're going to be going through a lot pretty quickly today, but the main sort of topics we want to hit on today is really getting an understanding of Ant Financial. We'll sort of walk through their evolution as a company, go through also through the effects of tightening regulation in China and how that sort of affected their strategy as well. We'll talk a little bit about sort of their shift to tech services, moving, sort of gaining less of their revenue from payments as well as financial services, and sort of the underlying shifts that they're going towards their open platform strategy. We'll talk a little about Ant's attempts to go global and their strategy in that regard. And then we'll end with sort of a look at maybe Ant Financial as serving as sort of inspiration to other financial services players around the world in different markets like Southeast Asia and Latin America. So let's get started. The first point that we want to make here is if you were to look today at Ant Financial versus sort of major financial services incumbents, as of its last sort of private market valuation, Ant would now rank sort of among the world's most valuable financial services firms. So one question we really want to answer in this webinar is sort of how did we get there, and also why are investors sort of valuing this company at $150 billion along the likes of Goldman Sachs, Santander, and others. To do that, it's important to understand sort of the backdrop to mobile payments in China. So in China, credit card penetration is extremely low. Per capita credit cards are about 0.31 versus 2.5 credit cards in the U.S. And of course, card payments in the U.S. account for about $5.7 trillion of transaction volume in 2015. That's just not existent or not happening in China. There's also sort of a long history of China's banking system and state-owned enterprises, in which banks are sort of more wary to move beyond mortgage when it comes to sort of consumer credit, typically setting sort of strict requirements around credit card applications, and also lacking sort of the strong tech expertise and relationships in which they can reach consumers directly. And of course, as sort of China's middle class emerges and its economy undergoes a shift from exports based to a consumption driven economy, China is going through what many refer to as a consumer upgrade, in which Chinese consumers are increasing their spend on travel, household goods, dining, fashion, and much more. And we'll see how that's played out in terms of other companies that have emerged at the same time, such as Didi, Meituan, and others. So when we look back and sort of rewind, in 2003, Taobao sort of announced that it would be launching online payments. And in 2004, Alipay sort of launched formally as a service. And at the time, in 2004, Alipay was quickly becoming a rapidly growing sort of online payment service. So it was doing a few things. One was it was enabling e-commerce. It was the designated payment service for, at the time, the 80 million users on Alibaba's Taobao marketplace. So consumers would naturally adopt Alipay to sort of enable those transactions. It was also bypassing credit cards. We talk a little about sort of low credit card penetration in China. And Alipay sort of ingeniously came up with sort of an escrow-based system, which would offer, and it sort of, with that broad accessibility, would really resonate with consumers. And they already started, as of 2008, we're already sort of looking beyond the Alibaba ecosystem to sort of launch Alipay as an accepted payment method in other areas, whether those are other retailers, other service providers. And already we're thinking about that quite early in terms of building out an ecosystem for Alipay. Of course, Alipay didn't really stay sort of an online payment service for long because China sort of very quickly underwent a mobile internet boom, in which sort of Alipay really rode that to dominance. So from 2008 2014, mobile internet users in China grew by more than 400 million. And as that happened, Alipay by 2014 was really sort of the leader in mobile payments. WeChat Pay had not yet emerged. We'll talk a little bit about them later in the webinar. But Alipay really became, by then, really the dominant player in mobile payments. So very quickly recognized that transition that was happening and positioned themselves accordingly. And there were a few things that really helped with that rise, and we'll talk about two of them here. One was sort of the rise of mobile commerce. So as obviously China's sort of rise of smartphones was taking place, a lot of what Alibaba and other leading marketplaces like JD.com were doing were trying to aggressively sort of shift consumers to promote mobile shopping. So they were aggressively putting sort of marketing around this, sort of deals around sort of mobile shopping activity. And you'll see by 2015, a lot of the penetration for mobile e-commerce had already reached almost 50% for Alibaba versus less than 15% in 2011 when it was still very much an online service. This year, e-commerce sort of penetration on mobile devices is expected to reach close to 85%, meaning that most people, when they're buying things in China, are actually doing so on their phone, whether they're at home, at work, sort of on the go in a subway or a ride share. And that's very much how e-commerce is getting done today in China. So just to highlight how mobile commerce really tied into the rise of Alipay, one example is by 2017, Alipay was processing about 72% of Alibaba's total GMV. So you see how closely integrated they are, especially as mobile commerce and mobile payments sort of emerged concordantly. We also saw another shift that really took place over the next few years, which was product innovation pertaining to money transfer, which also proved very explosive for mobile payments growth. So if mobile commerce really sort of drove an initial wave of mobile payments, money transfer was sort of responsible for another big wave of that. So this was actually started not necessarily by Alipay, but actually Tencent's WeChat Pay. So in 2015, Tencent created the WeChat Red Envelope feature. This was a feature that was very localized to sort of allow Chinese consumers to transfer money to each other during the Chinese New Year period. And that was very quickly followed by Alipay's launch of a very similar feature in 2016. It sort of, it's really important to underscore just how drastic this was in changing how users engage with virtual money transfer. Today, it's pretty much ubiquitous in China, taking place not just during the Chinese New Year period, but also throughout the year. And an example of how that really catapulted sort of mobile payments is if you look at sort of the personal application functions, so transfers between accounts or between cards and accounts, and repaying cards. By 2016, China's mobile payment volume originating from those functions grew to about 6.5 trillion in 2016. As of last year, as of this year, the Chinese New Year period, 768 million users sent red envelopes on WeChat, and about 250 million sent them on Alipay. So you can see how this is sort of contributing to growth. And we can sort of argue that there's another third wave that's really taking place right now, which is a combination of sort of online to offline services as well as offline mobile payments, which we'll get into a little later in the presentation. So of course, Alipay is sort of not a standalone player in the market. They do have competition, and I'd say the biggest competitor that Alipay faces in the market today, and probably for the foreseeable future, is WeChat Pay. So WeChat Pay grew on the back of a few sort of notable trends. One was product innovation. We mentioned the red envelope feature, which really catapulted sort of their usage and integrated quite nicely with WeChat's social messaging features, but also online to offline. So Tencent has, in the last, say, 8 years, has also not just been strong to push sort of their own products, but also actually invest in a broad ecosystem of companies within China. Two of their most notable investments and partners are Didi and Meituan, which is the most popular food delivery company in China, and both of those are responsible for a large bulk of the high frequency transactions in China, and both are both partnered with WeChat Pay, in which allows sort of WeChat Pay to grow quite quickly on the back of those transactions. So if you look at sort of the market more recently, as of the third quarter of last year, Alipay had about 54% of the mobile payments market share in China. WeChat Pay close to about 40%. And mobile payments, as you see on the chart on the left, continue to surge in China. 15.5 trillion expected mobile payments volume in 2017. And while cash is still quite prevalent in China, I think as of 2016, the figures were about 45% cash-based transactions. It's very quickly becoming a cashless economy in which if you were to sort of interact on a day-to-day basis in China, not necessarily needing to bring your wallet or cash, but actually can pretty much transact entirely on your mobile device. And that's quickly becoming a reality over the next couple of years. So we talked a little bit about payments. What were some of the rise of sort of mobile payments, as well as the rise of Alipay, and some of the factors enabling Alipay's dominance in mobile payments? But I think the big story that we want to sort of highlight for you in this webinar is Alipay's transition to a financial services ecosystem. So some of the sort of careful decisions they made were to really expand into those ancillary financial services, one of which was wealth management. So in 2013, Ant Financial acquired a majority stake in a small fund manager called Tianhong Asset Management, and they acquired that 51% stake for about $193 million. So the move was aimed at launching what is today known as Yueibao, which is a digital fund platform, with the main use case being allowing Alipay users to invest sort of the idle cash that was sitting in their virtual wallets. So very much a product decision, noticing that Alipay users were keeping a lot of idle cash in their accounts, not necessarily using that in transactions or sort of in other ways, but actually just letting it, not sort of using it at all. So they came up with this feature called Yueibao. As you see on the chart on the right, Yueibao today is the largest money market fund in the world, at about 211 billion assets under management, steadily growing since 2013, as more users sort of just adopt it naturally in terms of allowing their sort of idle funds on the platform to invest into Yueibao. Of course, over time, digital wealth management in China is a major opportunity, and sort of China will need to evolve from simple products to broader solutions. So in terms of sort of total investable assets in China, there's about 26 trillion as of 2 years ago, and that's grown increasingly further today. So certainly a lot of investable assets in China to have, and also sort of the lack of sort of sophisticated financial products today. A large part of Chinese investors' asset allocation is still largely focused in money market funds. In fact, Yueibao is a large portion of that. As of 2017, about 15% of that allocation in money market funds was in Yueibao. So over time, you'll expect to see sort of more of a move towards fixed income, towards equity, and it'll be interesting to see how digital wealth management products, Yueibao included, sort of transition to that as China's sort of wealth management landscape evolves. Ant Fortune is another product that Ant Financial has in the wealth management space. This is largely a marketplace model in which they pair China's asset management companies with consumers. So quite notably, Ant Financial says that they have 116 mutual fund asset management companies on Ant Fortune, which is largely the entire market, actually, of the asset management funds in China. They also claim about 180 million users on Ant Financial, on Ant Fortune, and are also sort of launching new products. So most recently launched sort of target date retirement funds. This is sort of a new offering in which they have 14 different sort of target date funds now available on Ant Fortune. And the advantage for sort of asset management companies to work with Ant Financial in this regard is not just access to consumers, but also tools that Ant Financial is building around them, whether that's digital brochures, whether that's fraud management, or whether it's just sort of smarter targeting and different other tech services that that these wealth management, asset management companies are willing to pay a services fee for. So we'll talk a little bit about that as we talk about their open platform strategy. Of course, Yueibao recognizes that there will be a lot of change in the wealth management space moving forward in China, and recognizing, this is a quote from the head of sort of Tianhong Asset Management, mentioning that they'll need to serve sort of those needs as well beyond just the money market funds and the sort of simple wealth management products, and hoping to expect to provide both bond and equity funds to sort of more users in the future, and already thinking about some of those as we saw with sort of the launch of target date retirement funds. So another area in which Ant Financial operates today is insurance, largely as an aggregation portal, another area where they function very much as a marketplace. And Ant Financial's insurance portal very, very much dominates sort of simple insurance product offerings. Their strategy has largely been to allow users to compare prices from different insurers. So today they have close to 400 million active users using the insurance marketplace on Ant Financial, 80 plus insurance companies that are selling thousands of products, in which Ant is really just delivering the traffic to these companies. Of course, taking sort of marketplace margins, strong operating margins on those sort of on this insurance marketplace. It's very much different than Tencent's strategy so far, which we've noticed has been more so to strike sort of one-off partnerships for customized insurance solutions. So they're partnering with firms like Taikang Life or MetLife in China to launch sort of one-off partnerships. They launched a healthcare product called We Medicare Insurance late last year. And in March, they formed a partnership with MetLife to launch a customized sort of aviation or flight accident insurance product. So a bit different in terms of strategies. And Ant has very much been to sort of power sort of the marketplace aggregation portal. Of course, financing services and lending have also been a major area for Ant's development over time. Today, they offer three different products. One is Ant Microloan, which is the credit loan service arm of Ant's private commercial bank, MyBank. So they provide sort of microcredit loans to small businesses. And the other two are in the consumer credit space. So GFA is a consumer credit loan service for Alipay users with sort of originally for strong Sesame credit scores, and they're handing out on average about 3,000 yuan each month, and very much aimed at driving consumption on Alibaba's marketplaces. So people who are looking for a phone might take out a loan from Jiabei to finance that purchase. Huabei is another product that they launched in 2015 in the consumer credit space, which is sort of allow users to buy items with credit, and notably sort of offering sort of a no interest installment repayment. And they claimed about 80 million users at the end of 2016. So what are sort of the value proposition of Ant offering financing services and lending? It's very much a mixture of both sort of their distribution, their massive distribution, as well as data. So here, a great piece in sort of Harvard Business Review in which Ming Zhang from Alibaba describes sort of the real power of sort of Ant's microloan product, in which they're able to use algorithms on their sort of massive amounts of transaction data to better assess how businesses are doing and offer sort of much stronger credit scores, and sort of details out sort of how that really sort of takes place in Ant's microloan product, as well as their other products as well. Lastly, another main area that they're in is credit scoring and credit systems. So Ant launched a service called Sesame Credit in 2015. China notably lacks sort of a FICO in China, like we have here in the US, sort of a reliable credit system. So they've launched this nationwide credit system that's very much integrated with Alibaba's ecosystem, where it can act as a credit reference. So they provide scores from 350 to 950, and reportedly may be used in a forthcoming sort of social credit system in China. The way this sort of operates on a more day-to-day basis is if you were to go on Taobao and perhaps look for something, you may be able to use the score to get sort of a reward or a better offer, maybe on a hotel room, an upgrade or things like that. That's very much how it sort of functioned. There has been a lot of criticism as well for this product, largely because it's tied to Alibaba's ecosystem, meaning people who probably make more purchases on Alibaba obviously probably have a better credit score through Sesame Credit. But we'll talk a little about both some of the difficulties and opportunities for Sesame in our next section. So just to recap, it's hard to describe everything that Ant Financial is involved in, but there are a few main pillars. So payments obviously being sort of the crown jewel, and really the gateway into this ecosystem that they've built, whether that's wealth management products, their own money market fund, Yueibao, whether that's Ant Fortune, where they operate a marketplace model, insurance, where they also operate sort of a marketplace model, credit scoring, as well as consumer lending and SMB lending. So this is sort of the ecosystem that Ant Financial really encapsulates today. If you were to sort of visualize this a little bit better, this would be an example of sort of half of Alipay's app, in which you can see sort of the payment services leading into a lot of these other financial services. The key really being, again, unlocking these opportunities from both Alipay's reach as well as the data they've collected. So offering these financing products according to the user risk profiles they build as people transact on Alipay, and offering not just sort of products like Yueibao, but also direct access to services as well here on their app, whether it's bike sharing, ride sharing, movie tickets, or others. I think one of the most notable things to keep in mind as we think about Ant Financial and why why investors and why people are thinking that they can be valued at such high valuation today is really sort of the upside they have in terms of their user base. So data from Ant Financial suggests that over 100 million of their users today are actually using all five of those main services: credit scoring, consumer lending, wealth management, insurance, and payments. And if that's the case, then certainly there's still a lot of upside when it comes to average revenue per user of sort of Ant's consumer base. And that's very much the upside that people are thinking about. And if that's the case, then we'll talk a little bit about some of the reasons why it's important for Ant to continue to acquire users and some of the things they're doing there. Of course, one of the biggest topics in China over the last few months and really the last year has been the effect of tightening regulation. If you were to look just at the headlines, you might believe that Ant is actually really struggling because of sort of the amount of headlines they're in when it comes to regulation. We'll make a bit more of a nuanced case that maybe there's less to be worried about than meets the eye. But let's go through some of what's happening today. There was an article a few days ago from Bloomberg in which Piyush Gupta, which is the CEO of DBS Group Holdings, DBS Bank in Singapore, highlighted that non-financial players like Ant Financial really need to be regulated more closely. His direct quote here is that there's been good reasons why you need to think very closely about the consequences in a regulated industry like financial services, and very much interesting in that regard when it comes to thinking about sort of Ant Financial's model and what they're trying to be. So over the last year or so, Ant has really taken a lot of steps to actually curtail some of their growth and sort of anticipate some of the regulatory moves that might be taking place. So if we look at Yoibao, for example, incredible growth since 2013 when they launched. But more recently, have been making a few moves. One is in May, they lowered their daily withdrawal limits. They also imposed sort of a ceiling per individual of how much you can have in your account. That said, it's worth noting that the average amount that users have invested in Yoibao is just 3,300 RMB. It's a pretty small amount, so it's very much still in the idle cash realm, not necessarily sort of a lot of people parking large amounts of money in Yoibao. Regulators are, of course, exploring new rules involving sort of forcing companies to obtain licenses, and also sort of specific regulations for money market funds as well. But if you look at even just their AUM, they've very much effectively done this, in which the end of Q1, Yoibao had about 266 billion assets under management. By the end of Q2, they had about 211 billion. So sort of self-curtailing a bit of their growth when it comes to ensuring that they're sort of meeting some of the requirements that might take place as regulators think of Ant more of as a systemic financial services player. Ant has also taken steps in their financing services. So obviously the consumer upgrade in China has created a surge of demand for consumer credit products, people wanting to buy smartphones or other items on the back of credit. It's caused a lot of troubles, especially in the P2P lending sector, in which in 2013, 2014 was largely an unregulated sector, which created sort of thousands of players in the space. But over the last few years, regulation has really clamped down, and there's a large amount of consolidation happening in the space as it becomes cleaned up. And Ant Financial has also sort of decided to also sort of slow down some of what they were doing in the space. So specifically, they would package a lot of these loans for the consumer products, consumer lending products, into asset-backed securities, which would then sell to investors. But as regulators are requiring lenders to sort of consolidate those products, Ant has really seen a big drop-off in asset-backed security issuance, which has affected their two sort of leading consumer credit products. So certainly the financing side is another area in which they've been hit by regulation. And also Sesame Credit is another area in which in February 2018, they announced that they would be sort of not necessarily servicing financial businesses anymore, whether those are other consumer financing companies, other online micro lenders, or unlicensed banks, and limiting more of their use cases to just credit checks for things like visa approvals or bike rental. So Ant has a big partnership with HelloBike, which is a bike share company in which they'll offer sort of they'll let you sort of not necessarily have to pay a deposit if you have a strong Sesame credit score. And in early this year, Ant was also punished for sort of automatically enrolling users into the Sesame credit system. So it remains to be seen sort of what happens here. Obviously, the big opportunity would be where Sesame Credit might fit into the social credit system that China is looking to have in place in the next few years. That said, it seems like they have been taking steps to sort of limit the use cases to non-financial purposes. So sort of more to come on this front. But the sort of main idea here being that the effect of tightening regulation really sort of just even the threat of what's to come has really forced Ant to think a lot about sort of not just curtailing growth, but how they want their services to act in their future. So that moves us to our next section, which is sort of how is that sort of having an effect on Ant's strategy and move to tech services and what they call sort of their open platform strategy. So in June, Reuters published a piece in which they described sort of Ant's shifting business model. Specifically, they noticed that sort of tech services would make up 65% of Ant's revenue compared with about 34% in 2017. And financial services revenue would actually shrink to 6% from 11%. And payments also being sort of significantly reduced from 54% of revenue to about 28%. So sort of shifting their model to tech services, but what does this sort of mean for their business? Would this be sort of a big hit, or how would this affect Ant's $150 billion valuation? I think there's a few ways to think about this, but one is sort of Ant's strong sort of marketplace models, especially when it comes to wealth management and insurance and lending. So when it comes to sort of wealth management, insurance, and some of the other financial products in which they operate marketplaces, it's important to understand that payments is not really driving sort of profitability for Ant Financial. It's really acting as the hook into the ecosystem. So we earlier highlighted that 100 million plus users of Ant Financial are using all 5 of their different products. And if that happens, actually, Ant can charge these financial institutions service fees to operate on their marketplaces. And the margins on these marketplaces are actually quite strong, very much resembling sort of the operating margins on their core e-commerce services, so in the realm of 60 to 70%. And wealth management products are a major opportunity for sort of average revenue per user growth because in China's economy today, cash and deposits still represent over 50% of retail financial assets. So as more people sort of use Alipay and use payments as the hook into this, into sort of their financial service ecosystem, belief or the hope is that a lot of them will also use these services, which have incredibly strong margins and can be quite profitable over time. So because of that, Ant is making a very calculated move to really acquire more users. So if you were to sort of look at their recent profitability and loss statements, they actually had a huge loss in the first quarter of 2018. This caused a lot of news articles in the press around sort of potentially Ant struggles in the market, potentially a delayed IPO as well. And that could be the case. But again, thinking of it more in the realm of if they are able to get a lot of these users to use all of these different functions they have, especially the marketplaces, then it's okay to acquire, to sort of, have that loss in terms of acquiring more users. One of the main aspects of which they're making a major push to acquire users is offline mobile payments. So you see on the chart on the right there, sort of the penetration of offline mobile payments over time, and very quickly catching up to mobile payments sort of penetration overall. So what that means is sort of in a more day-to-day use case is that if you're in China and you're paying for things offline, whether that's getting a cup of coffee at Starbucks or shopping at the grocery store, or even sort of going through one of China's many sort of subway systems at rush hour, Alipay as well as WeChat Pay are making a very strong effort to really get their platforms out there in the offline context. In especially the most high frequency of use cases. This drives more people to adopt Alipay, which again serves as the hook into these services, which can enable sort of strong revenue growth down the line in the future. And we also see within their open platform strategy, other ways in which they're sort of encouraging collaboration with financial institutions. We talked a little about Yuebao and the incredible growth that they've had there as a money market fund. But actually, Ant has taken quite an interesting step recently in which they actually launched 2 new money market funds operated by external parties in China called Boseri Funds and Zhongou. And this is quite a notable shift in which they're placing sort of competing asset management products from other companies, not necessarily owned by Ant, directly on the Alipay platform. So really sort of emphasizing in that case that they want to partner with financial institutions and take this open platform strategy. Another good example of this is in insurance, in which they're not just providing the marketplace, but looking to enable insurers with more tools and tech services. They've Two that they've talked quite notably about are sort of an image recognition tool that they offer for insurers to help with image and sort of accident reconstruction. And they also launched a sort of a car insurance score. These again aimed at really promoting that they want to work with existing financial institutions and incumbents and sort of encourage collaboration rather than sort of foster or at least the idea of sort of competition in that regard. And they've also sort of not just sort of operate in terms of the tech services in which they charge for the marketplaces in which they operate, but also expanding to other tech-driven solutions. Notably in May, Ant signed sort of 3 new bank partners to assist in their digital transformations. In a partnership with China Everbright Bank, for example, they sort of announced that they would be helping them with their cloud platforms, their open financial architecture, sort of biometrics verification, risk management, and others. And we expect to see sort of a lot more of this over time as they look to sort of continue this strategy of a move to tech services revenue and an open platform. So that's a little bit about sort of how we think about Ant within China. But of course, Ant Financial also has sort of global aspirations. So we're going to sort of quickly take a look at that in the next few slides. So before we take a look at Ant's sort of globalization strategy, it's probably good to think a little bit about sort of the Chinese tourism market. Notably, Chinese tourists prefer to pay with familiar mobile platforms, and today are actually quite among the top global spenders in terms of tourists around the world. So today there's about 131 million Chinese tourists traveling abroad each year. Of course, they spend a lot of money, in 261 billion specifically spent in 2016. And 65% of those tourists are using mobile payments abroad. So of course, Alipay recognizes and knows this and realizes that they need to make their payment service accessible globally, especially as Chinese tourists and other Alipay users are thinking about the service in a global context. So what has been their strategy so far? This is a good quote from Suhail Badran, who's the president of Alipay Americas, in which he mentions that they don't need to sort of boil the ocean or cover sort of every payments scenario in a city. They only need to be in the really key locations for major shopping, dining, tourist attractions. And they're doing this a lot in a lot of different cities, whether it's in Europe or in Canada, partnering with department stores, partnering with airlines, as well as tourism boards and other use cases in which they can sort of function in this regard. And they've also sort of, centered a lot on local partners. So the main strategy has been to take a small stake of about 20 to 40% in a lot of notable players in payments, sort of first in India and Paytm being sort of the main investment that they have there. But also more recently, of course, through 2017 in Southeast Asia and other parts of Asia. And more recently, we've noticed perhaps a move maybe more towards Latin America as well. So in this case, they're not necessarily beholden to any specific partner, but really sort of scouting the local landscapes and understanding who might be most strategic. That might be a family-owned sort of payment service. It could be a service that's very much operated by convenience stores or in place of convenience stores. It could be sort of standalone payment services, but very much, or it could be even messaging apps like Kakao Pay, in which Ant took a big stake in South Korea. So very much thinking about what's important or what's sort of the real nuances of the local use case and looking to strike partnerships with those different players in which they provide them not just with sort of the payment services, technology transfer, but also sort of market know-how and understanding how sort of mobile payments adoption, that knowledge that having built that in China. So this is another quote that we just highlight in thinking about Alipay's and Ant Financial's globalization strategy. From Joe Tsai, the executive vice chairman of Alibaba Group, in which he mentions that if you have a network of these partners that are on the same stack, there's no issue with interoperability. So in the future, anyone who is in the Philippines could use Alipay seamlessly take a flight to Hong Kong, be able to use that in a convenience store, a department store in Hong Kong as well, and perhaps travel to another country. That's sort of the vision behind what they want to build with sort of Alipay in terms of the global context. Of course, Ant is not only sort of partnering with local payments players, but also now thinking about how can they build an ecosystem so that these are sort of the winning payments platforms in the markets in which they've decided to enter. So in India, for example, Ant is now Ant and Alibaba are very much helping to build up ecosystems as well. So Paytm may have launched as a mobile payment service, but today now operates Paytm Mall, which is the online retail branch of Paytm. And Paytm Mall now sort of as an e-commerce marketplace, expected to do about 10 billion GMV by March of 2019. And Ant has also invested sort of a significant amount of money in India's food delivery app Zomato, which valued the company at 1.1 billion. And Zomato claimed about 3 million monthly orders in July. So again, thinking about the high frequency use cases for payments, and thinking about how they can enable their local partners in different regions like India or Southeast Asia to not just sort of operate payment services, but also ecosystems and building around those payment services as well. So that's just a short sort of bit on Ant's sort of globalization strategy to date. Of course, there's a lot more to come. We also didn't talk necessarily about sort of the MoneyGram transaction, which Ant was looking to acquire here in the U.S., but failed to gain sort of regulatory approval. But I'm sure there's a lot more to come here, and we'll be keeping close track of everything that happens as they continue to move into other regions. And just to tie up, I think it's also interesting to think about, Ant Financial is really sort of a major inspiration now today to a lot of other players in financial services and fintech more broadly. As we track and research a lot of the different models that are emerging around the world, it's interesting to think about how Ant has really helped pioneer sort of a playbook for different other digital financial services platforms that are looking to take on a similar playbook. So if you look at Latin America, for example, fintech is now powering, a large portion of the growth of Mercado Libre, which is the largest e-commerce player in Latin America. And more recently, while they've been operating a payment service for a long time, you see some of the remnants, and not necessarily sort of a direct replication, but sort of remnants of things that Ant has done or used in order to build, payments as a hook into broader financial services. So today, for example, expanding into QR code payments as more of their payments take place off platform. Also, they operate a loan business for sellers, very similar to Ant's microloan service. And they also recently announced plans to launch an investment fund. You can think about that as sort of an ancillary to like a Yuibao, in which they're allowing Argentinians to invest in high-yielding short-term securities. So again, thinking about this ecosystem approach to financial services and how Ant is really serving as sort of perhaps an inspiration to some of the other players in the space. Thinking about this in a few other examples, Line, for example, is a leading messaging app in Japan, but also looking to make a major push into fintech. I guess not necessarily Alipay would be sort of direct context, obviously, because of the messaging application, also very similar to WeChat Pay in that regard. But looking to push mobile payments into sort of cash-heavy Japan, has very ambitious goals for the number of stores that they're looking to accept Line Pay. But again, similar to Ant Financial, looking to use that as a sort of, hook into other types of services. So they've already started to partner with different firms like Nomura to launch an online stock brokerage in insurance, where they're investing in startups, as well as have a partnership with Sompo. They're also looking to build out services in cryptocurrencies in terms of operating marketplace there. So you can see sort of, other different players, again, Line being another example in which the financial sort of services ecosystem is also looking to take shape there. And again, in Southeast Asia, which is one of the most promising markets for financial services today, it's interesting because rather than sort of e-commerce or messaging, actually the leading players there today actually started largely in sort of on-demand services. So Grab and Gojek, very aggressive in emerging as super apps in Southeast Asia. So the way you can think about an app like Gojek, for example, is if you were to combine Didi's business with Meituan's food delivery business with Weiying, which is the movie ticket business, as well as Alipay and other services in one single app. So very much both of these players are making a very calculated and aggressive push into financial services. And a large part of perhaps why they may emerge as the winners in sort of fintech ecosystem building and payments is because of sort of how aggressively they've targeted sort of both their merchant community or their community around them, as well as looking to figure out and creatively gain ways into scaling quite quickly. So Gojek, for example, has an e-money license in Indonesia. Grab has worked with other partners to be able to gain access to those e-money licenses. Both companies have acquired different fintech companies. And Gojek recently announced that they'll be sort of partnering to enter P2P lending to expand into credit. So very aggressive, both of these players. In 2017, actually, Gojek announced that 100 million monthly transactions within their ecosystem, actually over 60% are processed through GoPay. So again, just very interesting to think about some of these different use cases that are emerging around the world when it comes to mobile payments, as well as sort of building financial services ecosystem around payments and how that might take hold in other markets. So we're going to just end here. There's a lot more we didn't discuss. We didn't talk about sort of, Ant's use of technologies like artificial intelligence or AI or what they're doing in blockchain. We didn't necessarily talk about some of the other ways in which they're sort of competing with WeChat Pay or sort of other things that they're doing on the front with Alibaba. But I think there's always a lot more to cover, and I expect if we were to do this webinar 6 months or a year from now, it'd be sort of already quite different. So just some key takeaways to keep in mind that we want to sort of drive home in this webinar is that the valuation is what gets a lot of people's attention at 150 billion. But it's really important to think about Ant as sort of a financial services ecosystem in which payments in a market as large as China, which you have 502 million mobile payments users, that's really the hook into these services like wealth management, like insurance and others, in which they can operate very strong margins and get very sticky users to engage with a lot of the different services that they're offering and perhaps will offer in the future that we don't know about yet. So they do have strong margins in those services, and also very much looking to transition into a tech services business model rather than sort of payments. And we'll look to see more moves there as they look to do that. Offline payments has been really the big story in China over the last year, whether those are sort of within unmanned convenience stores or in sort of local transit or coffee shops. Ant and WeChat Pay are really trying to ensure that that's where they can gain a lot of users, or fast food as well. Regulation also has been sort of the frequent topic, but again, that has caused Ant to adjust and perhaps taper some of their growth across their financial businesses. But if you were to believe that China's sort of financial regulation is sort of now quite settled, and say there were not a lot of major moves in 2019 or 2020, if you were to believe that, then it could be very feasible that Ant's growth could be quite strong heading in the next couple years. Of course, that remains to be seen, and we'll see what happens moving forward. And lastly, globalization strategy is largely been to partner with local payments players, provide them not just with technology and market know-how, but also helping them in some cases with ecosystem building around that and understanding there. So that's sort of the main takeaways that we want to sort of get in this webinar. And we'll end here with a quote that we like to use, which is, we always tend to overestimate the change that will occur in the next 2 years and underestimate change that will occur in the next 10. So 10 years ago, Alipay was just an online payment service. Today, it's not just a mobile payment, the leading mobile payment service in China, but also rapidly expanding globally, also rapidly expanding, their footprint in financial services across the board in China. So what will the next 10 years bring? And that's, I think, very exciting to think about as we continue to highlight sort of a lot of what Ant Financial's up to and will be doing in the future. Just very quickly, I will say that there's a lot more information on the CB Insights platform on Ant Financial, including all of their investments, acquisitions, sort of news mentions, We're also tracking patents and other data sets. So a lot more on the CB Insights platform. But I think we'll wrap up there and take a few questions before we finish up. So I know we have quite a few questions here. One of the questions is, so what do we expect for Ant Financial's IPO? I think so. A lot of what's been speculated in the media is that Ant perhaps might delay its IPO amid concerns for profitability. The main narratives there is that Ant is in competition with WeChat Pay, and also, as mentioned in one of the earlier slides, offline payments and user acquisition has really sort of crippled a lot of the profitability. And it could be, I think that might be true, over time, that it may take a little longer to get there than they would like. But I don't think that's necessarily, a bad thing. If they are able to sort of create the ecosystem and execute on sort of the strategy that has been put forth, an IPO certainly should be expected down the line. And that would be, quite exciting for sort of fintech overall. So there's a few other questions. We'll take maybe two or three more. Who did the valuation of $150 billion for Ant Financial? So that was as of their latest financing round. So there was a number of different participants in there. I don't have them off the top of my head. I believe a lot of private equity firms were involved, like Carlyle Group, Warburg Pincus, I believe, and a few others. But it was a syndicate of investors that invested into that round at $150 billion. So we do have all the financing information there on CB Insights, so I won't go too into that. Who are the key competitors for Ant Financial in the U.S.? So I think Ant Financial hasn't been as aggressive in the U.S. as it has been in other markets like India, where they are very much competing directly against Amazon in some cases for obviously e-commerce and other, and really sort of winning that market, or Southeast Asia, where they've been aggressive to partner with local partners. Of course, they do have a big partnership with First Data, so Alipay is available at a lot of sort of retail locations. That said, I don't think it's been, again, I think it's very much in the realm of their strategy of we just want to be in the main areas, whether that's dining or department stores or where tourists would tend to interact. So, I mean, you could think of their competition technically as other mobile payment services like PayPal or Apple Pay or others. But I think, if the use case is very much sort of for tourists, I think it's also WeChat Pay, who's also looking to make moves here. But again, I would emphasize that they haven't been as aggressive. Obviously, they did try to acquire MoneyGram and make a more calculated move here, but that didn't go through. So it remains to be seen. We'll see, what they do moving forward. But again, recent partnerships they announced, for example, were a local sort of supermarket chain that's very popular with sort of Chinese community and other things like that. So it'll be interesting to see, how they continue to make different moves like that as they look to gain sort of more of a foothold in the U.S. So will they be active in Europe? I think, again, similar to the U.S., I think where we see a lot of the usage in Europe is in the shopping use case. So Chinese tourists do spend quite significantly in markets like Paris and others. And there, if you were to walk into most of the leading department stores or shopping malls there, I'd say almost all of them, except Alipay and WeChat Pay, and also have actually Chinese speakers at those locations. So I think that's, again, they're very much the use case in Europe. So I don't think it's necessarily boiling the ocean being in front of payments throughout Europe, but specializing in making sure that they're there in those specific payment scenarios. Let's see here. So after the unsuccessful attempt to acquire MoneyGram, is cross-border money transfer still a key strategic initiative? It is. I think money transfer is definitely a key initiative for Ant. It'll be interesting to see if they make another attempt at perhaps another non-Chinese player in the global remittance or money transfer space. But it is very much a use case, and as they looked for the globalization strategy, I think it's not just being able to be available in some of those payment scenarios, but enabling sort of money transfer between families who might be in different countries. And so, yeah, I think that's going to continue to be a big strategy. What remains to be seen is whether they make a big strategic move in that regard after the MoneyGram sort of failed acquisition. So I think we'll take one last question. Alipay has been spun off, or is it part of Alibaba? So we should have gone into this, which is the sort of structure of Alipay of Ant Financial. So today, Alibaba owns actually a 33% equity stake in Ant Financial's business. This was a bit different than before, and Ant Financial then had to be obviously created as an affiliate. And then of separate affiliate of Alibaba Group. But yeah, today they are partially owned by Alibaba. So if they were to IPO, sort of Alibaba would have a big stake in that. That you can make the determination what that might have an effect on Alibaba's own valuation, which has been dropping a bit in the public markets. So I think those are all of the questions we can take today. We'll obviously answer a lot more by email or on Twitter. You can email me at mwong@cbinsights.com with any other questions. We'll, of course, be sending the deck as well in the next 24 hours. So you'll have all the slides here. So I just want to thank everyone for joining us. We'll be doing a lot more research on Ant Financial, as well as sort of a lot more of what we're seeing in fintech in markets like China, India, and Southeast Asia through the end of the year. So stay tuned for that and continue to check sort of our research portal for those updates. Thanks, and see you next time.